Hi everyone, hope you're all doing well, and today we'll talk about 3 UK cheap stocks to buy. So these are 3 stocks that I just throw at you guys as some stocks maybe to look into. I'll talk about where I'm at personally in these stocks because like I say, some of these stocks are not currently stocks I own, but the 3 stocks I have actually picked today are stocks that I do have history of buying them. So I am quite familiar with these companies. So like I say, I'm just throwing these stocks at you because they are quite cheap, and I mean cheap on discount to the like 52-week highs, not because they're cheap as in the value of the shares, just because they've sold off. And obviously if the stocks have sold off, that's normally due to COVID at the moment, so take that into consideration, that probably the reason why these sold off is because COVID has affected them in some way or the other. So yeah, I will talk about these 3 stocks today. You guys always seem to enjoy this series where I do just kind of, chuck 3 stocks at you to have a look at. So as always, if you can smash the like button, subscribe if you're new around here, and we'll take a look at these 3 cheap companies. So number 1 is a company that I used to own, but I sold out. I only held it for about a month, maybe 2 months. The reason why I sold out of this company, and the company is called Easyjet, so I'm sure you guys have heard of this airline. Obviously with an airline, it's one of those companies that has been affected by COVID. But I bought this company because it just got really cheap, and I thought I'll buy it because it's so cheap. It went up 20%, and I was like, I'm just going to take this profit because at the end of the day, I prefer Dark Group, and Dark Group is the one that I want to hold for the long term, but I thought it was just the easy kind of 20% I think I made on it, maybe a little bit more. So obviously with being COVID affected, there's a lot of risk here, and like I say, I prefer Dark Group over it because Dark Group has the better growth and better balance sheet. And with Easyjet, we know there's some bad news coming out with, it's struggling a little bit, and it needs things to kind of get back to normal ASAP really. But overall, this company has been sold off a little bit. It has tempted me just to buy a little bit more, maybe see what happens. I think that maybe if this company does drop below 500, that might be the point where you see me just, jump in a little and maybe buy a little bit. But even at the share price, I was kind of considering it. But like we say, EasyJet, it's one of those with not a great balance sheet, and with COVID, it might need to raise a little bit of cash. We know as well there's been a little bit of history with boardroom problems in this company, which is also another reason why I've always preferred Dark Group or Jet2 over Easyjet. So the ticker symbol is EZJ. And like I say, the stock pre-COVID was about £15 all the way down to £5 right now. So it has sold off. Pre-COVID, it was a company that was doing decent on the revenue growth front. On the profit front, it was okay. It wasn't as growing as good as what I would like compared to a Wizz Air and a Jet2, but it was it's still profitable. Revenue was growing at a decent rate, and like I say, if everything gets back to normal in a year's time, then obviously this company will do well if it does get to that point through the other side. Going into COVID, like I say, it wasn't an amazing balance sheet, but it certainly wasn't an awful balance sheet. It had a 73% debt to equity. It had about 1.4 billion in cash, 1.3 billion in debt, so cash to debt was kind of equal. Obviously, we know that the company probably will be burning through that cash a little bit right now. And it also paid a little bit of dividend. That dividend would be at 8.5% dividend yield. It did pay it last time, but it probably won't be paying it going forward. But it was not, it was an okay payout rate. And there has been insiders kind of buying more than selling. So yeah, we did have the lead director buying, but apart from that, it has been a little bit quiet recently on the insider front. So overall, it is still not probably the worst airline play out there. And like I say, if it carries on selling off a little bit in the short term, it might be one to have a look at and to maybe pick up. So the next one is a company called Legal & General. I'm sure you guys have heard of this one as well. Basically, it offers a lot of different sort of investments. It's a financial play, which include lifetime mortgages, pensions, everything like that. With it being a bit more of a finance play, historically the stock hasn't done amazing on the share price front, but like I say, it has steadily gone up really. Not a huge amount, but it has moved in the right direction. But since COVID, we have seen the share price drop quite a lot. And it's actually one that I do own a little small position in Legal & General, but I'm actually considering maybe buying a little bit more while it's at these sort of prices. I'll probably let you know on Friday if I did buy some more. But the ticker symbol for this one is LGEN. So like I say, it is sold off quite a bit, and like I say, it might be one that I do pick up. So Pre-COVID, it was a company that was trading around about just above the £3 range. It's dropped down to about £2 right now. I was recording this video, so like I say, it's still on a bit of a massive drop. P ratio, not too bad at 9, probably about what we expect for a kind of financial company. Obviously, revenue with it being a bit financial is kind of like in and out a little bit. So yeah, but it's kind of mostly grown in the right directions. When we look at the earnings wise, it's a company that has slowly increased its earnings as well. So revenue and earnings are kind of okay on this company. I'll be honest, we're looking at this company for a dividend when I do get to the dividend point of view of it. The balance sheet wise has got a lot better over the years. It's now trading at a debt to equity ratio of 61%, which is not amazing, but it's okay. It's like I say, it could be definitely a lot worse. It does have 5.6 billion in debt, but the cash on it is 21 billion. So the cash is 4 times to its debt, which is, I think, is a pretty good rate that it does have. So like I say, it's not an amazing balance sheet, but it's still pretty decent. And like I say, we're looking at this company for a dividend point of view, and currently it's paying a dividend yield of 8.8%, which is fantastic. So I currently, when I got my payment on this one, I was like, wow, it's a pretty good dividend player. So that's why I'm kind of looking at maybe buying this one a little bit more because of its dividend. It does pay it a little bit high on 84%, but like I say, it's not crazy. It could be slightly a little bit lower. And the one thing that I really do like about this is the amount of insiders that have been buying on this company. You look at the insider front, and all the way through the COVID situation, there's loads of people buying inside the company. And a lot of them as well have been, decent roles as well. So that kind of gives me a little bit more confidence to actually go and buy more shares in this company. And as well as that, I did sell out my other 2 financial plays, which were Barclays and Aviva. So the one that I kind of have left kind of makes sense to just make it a little bit bigger for the profit. I mean, I sold Barclays, I think, for 55% profit, and then obviously sold Aviva last week for a 20% profit. So I'm happy with what I've done in that kind of area over the course of this last year. The last company is another company that I own. So like I say, 2 on this list today that I do own, and 1 that I did used to own, and it's kind of tempting me to get back in. But the last one that I do own on this list is Card Factory. So obviously this is kind of greeting cards, wrapping paper, gifts. Obviously the one thing that I don't like about this sort of industry is that it's a brick and mortar store, and I'm not a big fan of this area. I don't like buying high street, especially in the current situation. But sometimes high street stores, when they get to prices where I'm like, okay, that's kind of ridiculous now. That's really cheap. A Card Factory has got to that point where it's in that kind of place where I'm like, this is ridiculous. So Card Factory at the moment at these sort of prices, one that I'm kind of willing to look at buying even more. It's down at 35 right now, which is it's just insane, isn't it? Like pre-COVID, it was a company that was about 75. Even last year in 2019, it was 170. 2018, 240. 2017, it was 347. This share price is just, it's done a bit of a Titanic iceberg moment at the last kind of few years. It's just gone down and down. And I think that's kind of due to bad management, which Card Factory have now got rid of. And obviously the COVID situation hasn't helped. But historically, this company's always done profit. So it's kind of like, should it be really going like to bankruptcy levels when it's a company that's historically done profit? I don't know. I don't think it should be. So that's one for you guys to think about. But yeah, Card Factory, when we think about Card Factory, gifts, cards, obviously Christmas is the peak time. You know what's coming up in 3 months? Christmas. So it's going to be a good time for Card Factory overall. Obviously, it's done some really good deals. I think getting rid of management was a good thing. I think as well as getting rid of management, it's also increased its online presence a lot more with Getting Personal, and also Card Factory, its online website. They've seen some fantastic growth, which is great. It also did a massive partnership with the Reject store in Australia. So now it's got another 350 stores. So combined new management, the Reject store deal, and its online growth, and that it's coming to its peak time. Don't think it's too bad of a position now to be looking at buying Card Factory. I think it's kind of, I can't see it going much cheaper than this. So the ticker symbol for this one is CARD, C-A-R-D. And like I said, the share price is massively sold off over like the last kind of few years. When we do look at the profit and revenue sort of front, you'll see that revenue has done okay. It's kind of grown in the right direction slowly, but it's the earnings that have been hit quite a bit. But still, we still look at the company, and it was a company that was doing revenue of, from January, it did 451 million in revenue and 51 million profit, but the share price has gone down absolutely huge. And you're looking at it like, well, it's still okay, we normally, when we see share prices with the decline this much, is because the company has sunk from, growing revenue and profit. It's gone from profit to not making money, but this company's still doing all right. And I think there's a chance it could still do okay this year if it pulls out a very good Christmas period. So we'll see what happens there. On the financial side, the balance sheet is probably one of the worst ones that I invest in. It's got 86% debt to equity, which is the only thing that I don't really like. As well, it's got 32 million cash, 177 million debt. So like I said, the cash to debt could be a little bit better. That's what I'd like to be stronger on it. So hopefully it can sort that out. It used to pay a little bit of a dividend as well. And the dividend yield was quite a high dividend historically. But obviously it's cancelled that. I think maybe next year we'll see that dividend come back. If not, it will be the year after. So I'm sure that will get people back into the company. And I have to say, there's no current shareholders buying the company, which is something I would like to see happen. So we'll see. But overall, I think it is quite a cheap company right now. So guys, those are the 3 cheap UK stocks to buy right now. I hope you enjoyed that little video talk about them 3 companies. As always, if you can smash the like button. If you are new around here, make sure you subscribe, and I'll see you next video.